Hello, and welcome to the Physical Therapy Owners Club podcast. I am Nathan Shields, and I've got a returning guest, Connie Ziccarelli. Connie, it's been a couple of years since we've had you on the podcast. So those who are new to the podcast, go back and listen to our conversation about leadership that we did back in 2021. But Connie is the founder of Guidepost Practice Management Solutions, and she consults physical therapy private practice owners across the country, and it's great to have her on. Thank you for joining me today, Connie.
Thank you for having me back.
All right. Well, I'd love that you reached out to me because I don't get a lot of feedback on the podcast. Like I hear once in a while, hey, I appreciate the podcast, I love the value. But it's good to hear from listeners. And you were a listener who was also a previous guest who said, hey, I listened to a podcast episode and I want to add something to it. And so number one, I really appreciate you listening. Number two, I really appreciate you not just listening, but also saying, hey, I have something to say, and I'd love to share it with the audience. So thank you for doing that as well, for taking the next step. And let's talk about it. Which episode kind of led you to reaching out to me?
I'm not sure quite of the number, but I can tell you the topic.
Sure.
The topic was with you and Adam, and you all were talking about how hard it is and the squeeze that is happening in private practice, trying to get reimbursement, visits, units, upfront collections all together, and how you have to really watch all of these tenants in order to have a healthy bottom line.
Mm-hmm.
And I found it very engaging. And I was taking notes and I started to think about, all the places that revenue comes from, or all the way revenue comes into a private practice. And I started making a little notepad. And one of the blaring things that stuck out was this area of managed care and your contracts with third-party payers. Mm-hmm. Okay. And I'm working with practices on just this, looking at their contracts, looking at fee schedules, looking at adjustment rates, and also really investigating explanation of benefits, or the EOBs that come back from these payers. And there's gaps. Mm-hmm. And if we are not watching that, then we could be missing revenue. We could be having our third-party billing company, if you're outsourced, your billing company, not bringing it to your attention and having a way to cure it. Or we might be missing strategies that therapists need to know on the floor on how to better document and code for maximum reimbursement. It all starts with that hub, that managed care hub. So I thought adding this to your discussion of how do you have a healthy bottom line would be, quite interesting to dive into.
Well, for sure. And just to be clear, is that something that you do as a service for owners, is to help them navigate those contracts? Or is that something you simply guide them on? Or do you actually say, hey, get me that contract so I can review it? Is that a service you provide?
Little of both. I've been speaking at it at conferences, and then private practice owners have been reaching out, and I'm doing a hybrid. Some want to learn how to do it themselves, and some say, give me the bottom line and then train my people. And so they give me the contracts and I go to work. So yes, I am elbow deep into this kind of audit.
It's something
I will add real quick. It's also a great element that is part of your compliance plan. So one of the 7 elements of a compliance plan is to audit your contracts, right? And to audit your billing and to audit your reimbursement. So this checks that box off too.
Yeah, exactly. And that's one thing where when a physical therapy owner, and this is probably true for most small business owners, they open their clinics in our case. And that's one thing where you might say, I would say a majority of owners, and correct me if I'm wrong if you've seen it differently, majority of owners would say, I didn't know I had to do that. I mean, I just thought I signed the contract and that was it. And I would go further and say that most owners, if a buyer wanted to come or wanted to buy their practices and they said, let me see your contracts, a majority of owners would say, I don't know where to find those. I don't know exactly where those are. we're just not like that. We're knee deep in treating and guiding and
Mhm.
leading and KPIs, you name it, all the stuff that Nathan Shields tells me to do on the podcast. One thing that I haven't covered on the podcast is managing our contracts, really.
Mhm.
Right.
Mhm.
And so that's why it's awesome to have you on today. So where do you tell an owner to start? They have, let's say they have 12 to 15 contracts
Mhm.
that they should be quote unquote actively managing. Are most contracts, can they get a paper contract from their insurance carrier if they wanted to? Are these all online on a cloud somewhere or some kind of portal? Where does an owner start to find the contracts?
Great question, because I'm seeing it all over the board. I have
Really?
some that can put their hands right on their contracts and they have preserved them nicely. And some are like, I could not tell you where to begin to look. And
That's
then
me.
I have some private practice owners right now that acquired their business from another physical therapist and they never even asked
Right.
at that acquisition time. I helped a physical therapist go through a sale, and that was one of the first things they've asked for is like, let's look at your contract and let's look at your fee schedules.
Mm-hmm.
So no matter where you are in the cycle of your career or the cycle of your practice, it's going to be important that we build this department. Okay.
Mm-hmm. Mm-hmm.
So the very first thing I do is I ask for a payer mix, and that's out of your accounts receivable report, because I
Yeah.
want to see what the ranking is. What plans are you getting most volume from? Because I start with the least and go to the less. Okay. So if the payer
So you
mix,
go to the smallest payer mix,
I'm sorry, the most to the least,
you go
the
from the
one that
most
has
to
the
the least.
most
Oh, okay.
volume, and then
Yes.
work my
Good.
way down.
Good.
Yes.
Yeah.
So we identify maybe the first three, the first five, depending on how
Okay.
many contracts you have,
Yeah.
and then we go find them.
Let's find
If
them.
you don't have them, you can call for them. It
Right.
will take repeated calls, but they have to supply it to you. Okay.
Right. Exactly.
So I've done everything from go to a provider rep. I have used a provider rep from another state to get me a contract in another state. I kind of pull in some favors if a practice owner can't get their hands on them. But 9 times out of 10, they're successful with a couple phone calls to get a copy of what contract is in play.
Okay. And is that something an owner has a credentialing service? Would most credentialing services have those on hand?
If
Would
they
you think?
helped you with the contract. If
Yeah.
they helped you with the contract negotiation, then yeah, I would say they would keep it.
Mhm.
I would hope they would keep it. So that would be an an outlet as well to try.
Okay. Yeah. And if you negotiated this contract outside of the credentialing service, of course, they probably should or don't have that contract on
Mm-hmm,
hand.
mm-hmm,
Right.
mm-hmm.
Okay. Gotcha. Well, I like the approach in that it's kind of one bite at a time.
Yeah.
Um, let's not try to get all of your contracts within the next 2 weeks. Let's just
No.
focus on, let's get one or two here in the next
Mm-hmm.
couple of weeks, make the calls that you need to make. Because obviously you understand the audience, Connie. These are a bunch of owners that might be treating full time or treating part time, and have a lot of other duties outside of that.
Mm-hmm.
Um, let's just start small and go
Absolutely.
from there, so that they can know that they have their contracts on file. And do you find that most contracts are paper, or are they mostly electronic nowadays?
They're sending them to you like an electronic PDF.
Okay.
So you could either download it or save a digital file. I personally like both. I want to have a paper copy because that can be my first source. I can flip through it real fast. I print them when I get them, actually. And I want to circle all of the places that I have to go back and look at.
Make
But then, of
notes.
course, you would save it as a digital file for
Sure.
posterity.
Okay.
But even though they're evergreen as far as the date that they renew, right? But they're not evergreen with what fee schedule you're on today.
Right. So you could
So
have signed this 10 years ago, but the fee schedule has been vastly changed since then. Will they
absolutely.
send that with you as part of that contract, or is that a separate request?
You would have to request it at the same time.
Mhm.
Most fee schedules are posted on payer portals.
Okay.
So that might be an easier grab. At least we could start the audit with the fee schedule and EOBs.
Mhm.
while you're working and waiting on the contract.
Okay. Gotcha. So you're going to expect when you're working with people to organize this department, you're going to start with number one, asking for the contracts. Number two, the appropriate current fee schedule. You want both
Correct.
of those things. Is there anything more you're looking for outside of that?
And then I always get the current CMS fee schedule, because a lot of payers base their reimbursement off of CMS, or at least CMS's relative value system.
Right.
So I want to have that as my benchmark for that locality or for that area that I'm looking at, so that I at least know what kind of my spine is,
right,
to judge how a payer is first of all paying a CPT code, or valuing it, right?
Yeah.
That they're at least valuing it the same as CMS would.
And that's where, if you want that CMS fee schedule, you can just go to the intermediary for your area, right?
CMS.gov. Then you scroll down to your locale and
okay, and it'll
print
take
away.
Okay, gotcha. We'll go from there. And so you're looking for the fee schedule. What are the next steps after you have some contracts? You're procuring those with the updated fee schedules and CMS. Next steps.
So it depends on how deep the practice owner wants to go. I like to start at the beginning. Where's the contract? How do we look online? Is our clinic even listed on the portal? Is it listed accurately? Are our therapists on there? Are our specialties on there? Can patients go to the portal and get my exact way I'm listed? So if you haven't updated or looked at your portal, I encourage you all to go online and look what your patients look at. Okay, go to humana.com and see how you look to a Humana person. So that's how deep I go. I start with every component that the practice would need to double check when it comes to how a patient will find you, and then how a claim is paid and processed, and then how utilization is managed with the contract.
Okay.
Authorization. So I would start at the directory, then I work my way down. I make sure that we have the ERAs, or excuse me, the checks coming to the right bank account. We're not getting them paper, we're getting them electronic. We change them to electronic if they're paper. Then we start pulling EOBs, and I do a sample a quarter. So if I was doing an audit today, I would look at a sample from Q4 of last year, Q1 of this year, Q2, and Q3. And I look at the EOBs and I compare that to what I've agreed upon to be paid, or what the fee schedule is. And I find any variance.
Oh, wow. How often do you find a variance?
A lot. More than you would think.
Really?
Yes. In fact, I'm proud to say I help a practice find 8% more money that we got to resubmit the claims for the previous year, and all of that got reimbursed because they were paying at the wrong fee schedule.
Oh, wow.
It happens a lot.
So, I'm just a naive owner. I'm just expecting them to follow the fee schedule that we've agreed to, yet they could change it at any time. And correct me if I'm wrong, but I'm not getting announcements of the fee schedule changes.
No.
Right? They just kind of happen.
They happen.
Is that right? Am I wrong? Am I missing a letter somewhere annually? Or is that how it goes?
Their burden of proof, or their burden of acknowledgement to change a fee schedule, is that they can post it on their website.
That's it.
So if you're correct. So if we're not proactive as practice owners, and we're not at least having some sort of radar that says, you know what, every quarter, let's just go look, just like you would a CCI edit, the correct coding initiative. That's changed every quarter. Well, most quarters it doesn't change, but on the quarter it does, and you don't follow it, you're going to get denials. That's the way I feel about fee schedules, is they can change it. So if we don't at least have some sort of, at least once a year or twice a year, or whatever that comfort level is for a practice owner, to go double check everything,
right,
to make sure they're paying, then it's kind of, our burden.
Yeah, it sounds like that's where it is. We have to make the extra effort. It's just one more thing we've got to do.
Well, again, I like to eat an elephant one bite at a time.
Yes.
So I look at how many plans. I would recommend that you look at how many plans you want to audit. Maybe it's 6, okay? Maybe it's 12, whatever that is, and divide it by 4 quarters of the year.
Okay.
And every quarter attack a couple.
Right.
Every quarter attack a couple. And now really, you really probably would not have to look at that again until the next year.
I see.
But at least you're having your team or somebody that is maybe assisting the practice owner, maybe an administrator, or at least requesting it from your third-party billing company to send you EOBs so that you could do a quick proof. Mm-hmm. Okay. When a chart gets audited at a payer, they don't ask for every patient. They ask for a sample.
Right.
So I do this the same way. I get a sample. Okay.
Okay. When you say a sample, maybe 3 to 5 EOBs from a single payer?
3 to 5 patients, because I want to see their whole I want to see their plan of care. Yeah.
Okay.
Yeah.
I see.
So maybe, if it's this plan, let's say it's 10% of your practice, maybe we start with 10 charts. Okay. Mm-hmm. And let's look at 10. If we find any variance, let's go to 12. Let's go to 15. And then you take it, one step at a time till you either found a billing pattern or you found an issue that we need to address.
Okay. And so we're looking now not just at mistakes that the insurance company may have made in payment to us, but now we're looking at how are the providers billing and are they adjusting accordingly to how the insurance company is paying. And we're also assessing the billing collections team. Well, these got denied. Now, where are the payments and what was your appeal process? You're looking at a couple of other things so it's not just for the sake of assessing and making sure that the insurance company is paying what they're supposed to pay according to the fee schedule that they've posted online, gratefully. But now we're also assessing how is the billing and collections team doing with these particular claims, and are the providers adjusting accordingly?
Correct.
Is that about right?
And that is very correct. And also I'm looking for any coding variances. Okay, so you've got your coding pairs you might have to be looking at where you put the 59 modifier on, but I found some pairs that aren't paying certain CPT codes. Well, then you go back that up and you say, oh my gosh, they don't have this on their fee schedule because they're using a fee schedule from 2 years ago and this code came in last year. Well, if we don't know that, we're excited to use the new CPT code, but the payer hasn't caught up with us. And you know what they write it off to? The discount comes through as a CO45, which is a contractual write-off. Okay. So if your billing team isn't sharp on their coding as well, they're going to strike their pen to that, and it's going to go on your adjustment report as a contracted discount.
Mm-hmm. And you'll never see it.
You'll never know.
And that's the thing. There are these just little adjustments between each commercial insurance company where, and I'm talking from years ago, but like one company would never pay 97535 the same time you billed 97140. Mm-hmm. And if the providers weren't aware, they would just keep billing 97140 with a 97535, and it would just get written off. There's nothing you can do about it at that point, right? And so it's at that point where the billing and collections team needs to be reactive in this situation to say, so that proactively in the future, don't bill 97140 when you bill. I mean, there needs to be, and my friend did this the best in Mesa, Mark Moore, I have to give him credit. He has a billing cheat sheet of his top 12 to 15 insurance payers and the little changes that you have to be aware of. This is for the providers that you have to be aware of so that you don't bill this. You can bill a re-eval code here, but not here. You can do this instead of a re-eval code. You can't bill 97140 with 97535 on this. And you need to have that understanding between billing and collections and provider teams. But if you're not assessing it, then you're just throwing all these charges out, hoping some of them stick.
And that's where, again, listening to that podcast, the last episode that you did that I listened to with Adam, That's where you guys were also talking about, looking at charge per visit and making sure that your units are there. Well, you could be throwing all of that and hitting that KPI and really reimbursing and rewarding your providers for hitting that KPI. Right. Okay. But it's this hand that gets the money. That if we're not watching that, we're going to be busy going out of business.
But
hitting
we're
our KPIs. Exactly. And why am I not making money? So when people say, well, Connie, my reimbursement per visit keeps going down, the first thing I do is we need to audit your managed care payers. We need to look at your adjustment report, and we need to get your fee schedules going. Okay. Because those three tenets make up reimbursement per visit. Okay. So as adjustments go up, that CO 45, that contractual adjustment, reimbursement per visit goes down.
Right. Do you see this discrepancy where there's a denial, there's a CO 45 for a particular code with a particular insurance company? And do you see that lack of communication more so with an outsourced billing company? Is there just a trend, or do you just see it pretty normal across the board, whether billing's in-house or outsourced, that they're just not paying attention and they're just writing off least amount of energy expended possible, and post the claim as is? Is that kind of what you're seeing?
Yeah, I'm seeing it across the board, and I saw it really take a spike when we went to auto posting. So when the software companies came up and said, oh, we've got this really great thing where we're going to post this money, or this bot is going to post money, and all you have to do is approve it. Well, at that point, we weren't examining it maybe as closely as we should have, as when we were manually having to put in this payment, right? Sure. Because when that comes through, the auto posting is going to see CO 45 or N113 or whatever those ANSI codes are that say it's part of a contract, and they're going to say it's okay.
It's just a write-off.
And then if you're not challenging it as the person that approves it, which I can't plug enough, that your administrators, your third-party billing companies, everybody have got to be on top of their coding and be on top of denial management. Right. That money, you'll never know it's gone. You'll never know it was there, because it will be gone. You can't go back. You would have to do an audit of every chart for every visit to even see how it, to see if you could even recoup it, which is why I say these audits are so important.
Right. When you find those write-offs, CO 45 maybe, or some of the ones I explained, is it impossible to go back and appeal, or just super difficult and time consuming?
Well, it's going to depend on what we find. In the example I opened up with, it was written off to contractual, and then when we did see that it was a fee schedule, they did not pay according to fee schedule, and we did do the resub, those got adjusted.
That was worth it.
Okay, that was worth it. If it's a denial or a write-off that you need to challenge the contract, because maybe the fee schedule is, the example I used 2 years ago, and we want to use 97129 and 97130, but it's not on those fee schedules, then you may have to go back and get that into your contract or work on getting that paid, which is a higher level than just resubmitting a claim.
Yeah, I gotcha. And that's going to be a lot of effort well, you tell me, is it a lot of effort to change your fee schedule at that point to show these new codes?
No, that's not hard at all. That's not hard at all. Yeah.
That's not too difficult.
That's not too difficult.
Work with you on that kind of stuff?
They'll work with you on that, or at least tell you a timeline of when it will be available. Okay. And now you make a decision on the floor. You make a decision as a practice owner. Okay, what are we going to do with this service? Okay.
Got it. And how do we adjust?
Right. To me, I call that, now we go back and we talk about it as a clinical team and say, here's the issue. How do we want to now do our plan of cares?
Okay.
And at least we're making an educated decision versus just writing money off.
Right. Exactly.
We still may want to do it, and that's fine. I have a clinic that still wants to do dry needling that's not going to be paid, and that's fine. But at least going into it versus it being done to
that we're not getting paid.
Yeah.
And now you can
Yeah,
make the decision, do we want to continue billing this code, or do we want to make this a cash service instead?
correct.
At least you're
Correct.
knowledgeable about it, right?
Hmm.
So
Hmm.
did we hit a lot of the points that you were that you're seeing, especially the things that you've come across as it relates to what piqued your interest in reaching out?
I think so. The only other thing I would add is, looking at your adjustment report monthly and then quarterly to see any trends.
Mhm.
Again, watching that to see where your money's going. An adjustment report says somebody was allowed to take money off your books to not get collected for something. So I want to make sure that we look at that monthly and watch it quarterly with your adjustment percentage. Okay.
Okay.
The other thing I encourage practice owners to do with adjustments is to start thinking about in 2024 to start having more specific adjustment codes. Meaning, if you've got a contract with a plan, have an adjustment code that is for that plan so you can start watching how much is billed to that plan, how much is paid by that plan, and then how much is adjusted off for that plan. Because when you go to renegotiate, you're going to want to know those numbers. You want to go talk about your contract. You're going to need to know, how much money did I give away, right?
Mhm.
How much money did they take off of my fee schedule? So I would encourage everybody to look at their adjustment code. Just don't have 3 or 4 of them, have many of them. And then train your team to say, if it's written off for this reason, I want it to this code. You
Okay.
can track your hardship, you can track your contractual adjustments, you can track many things to know and watch, excuse me, because if those come out of line, you know exactly where to attack to bring it back down.
Now that's something I've never done before. I never really assessed my adjustment report. We did, in very general terms, assess collections versus charges on a monthly basis. And so we looked at that percentage. We didn't look at the percentage by insurance payer. So when you're talking about adding codes to these adjustments, that's something I'm assuming most billers would be comfortable and know how to do. Because I don't know if I could manipulate an EMR system to do that myself. So I'm assuming that you'd have
You
to work
can,
closely with your billing and collections team, whether that's in-house or outsourced, to
correct.
develop some of these codes. They probably, your billing collections team might need to actually listen to this episode if necessary. But to, number one, put those codes in place and put them in place by payer.
Mm-hmm.
Um, that's something I would assume then that, and would you assume also that the billing collections team would be comfortable doing and know how to do?
Yes, yes,
Okay.
because most of your softwares out there allow you to, when you put a insurance company in to bill,
Mm-hmm.
you can attach a fee schedule, you can attach an allowable schedule, and you can also assign it its adjustment code. So
Okay.
it's just going back and again through an audit saying, I want to change this one this quarter. I want to change this one next quarter. So it's just part of that audit process so that at the end of the year, you've got your AR being reported by payer.
Okay. Yeah. You're going high level on me there.
I guess that's visit number 3.
As you're pulling together these contracts, you're assessing how they're paying, you're doing a contractual audit, maybe on a quarterly basis, annual basis. The I guess that's, if someone's going to negotiate a contract, that's the first place you'd recommend they start, right? First, number one, pull your contract, pull a fee schedule, get some EOBs, make sure you're auditing accordingly, make sure you're billing appropriately according to what's acceptable and what's CO 45, outside of CO 45, and what's in the contract. So that's where you would start, right? I mean, I'm assuming you've negotiated contracts before. Yeah. So tell me a little
Yeah.
bit about that process.
Well, I always have an old saying, you never enter a battle you're not prepared for. So you need to be more prepared about your processes with the payer than they know about you.
Mm-hmm.
So I definitely do that. I get the contract. I look for a couple things. I make sure that the terms of the contract are there, that we're in an active contract. I pull the current fee schedule. I look at billing. So I want to see our total charges for that payer, our total reimbursement, and our total write-off again, which is why that adjustment code is important by payer. Then I understand the utilization processes, who's managing my claims. And then once I have all that information, I find out who my provider rep is. I make some proactive phone calls. And once I know all of that, I ask for a meeting. I don't ask for a meeting to renegotiate rates, because you usually get we're not giving raises.
Yeah, we're not doing
okay.
it. They
So
just laugh at you.
Yeah, that's not how I enter the battle. I enter the battle with, our contract is coming up, and we know that there are several things that have changed in the marketplace. I'd like to sit down with you and talk about our contract and the members that we serve for you. And we talk a lot about just how the contract is working, how many members we've seen, what our volume was, that kind of thing.
Okay.
Then the conversation comes around to payment. And then we dance around that for just a little bit.
Okay. Gotcha. And that's on the second meeting. That's not on the first one.
It's not on the first one.
Not on the first call. I gotcha. The same procedures. Some of the lowest payers are flat rate payers, right? Do you follow some of these same procedures as you're dealing with flat rate payers? Like if you got a United Healthcare plan, that's your flat rate payer. It's been the same for 3 decades. I mean, do you approach that differently?
We'll just use the word United Healthcare. I approach day rate.
Because they represent all the flat rate payers.
Yeah.
Let's just say
I look at that you might not be able to get an increase in your rate. But if you do this managed care audit, you can start finding out where you can streamline labor and put in more efficiencies for this payer. So the bottom line isn't only impacted by more dollars coming in, it's also impacted by how much labor it takes to give the widget, right? So when I'm looking at day rates, we really start separating out, okay, what is the responsibility of the payer to bill a portion of the visit, and then what is the responsibility of the patient to pay part of the visit, because a day rate is a shared rate. So again, if you're not collecting that up front, you're billing for your $30 or you're billing for your $25, right? It takes more money to send a claim out than what you're going to get paid. But then we look at utilization. If you could get a day rate payer to drop some of the utilizations because you can show how you're doing your plan of cares, that right there is a win, right? If you can work with the payer on, getting 3 or 4 or 5 visits before authorizations even kick in, that's a win. So there's many ways to look at how do you renegotiate with it not just being about that getting more money on that day rate. It's also about controlling what we can control, right?
Right. That's a good way to approach it, because we are focused on the average reimbursement rate, right? But maybe the average reimbursement would be a lot easier to swallow if it didn't require hurdles of authorizations and records requests and you name it back and forth to get 3 more visits for someone who's only had 3 visits thus far, right? So maybe I like where you're approaching that, as maybe there's if it is one of those big hassle flat rate payers, maybe your conversations with them could be, okay, what do we need to do so that we can make this streamlined as much as possible? Because honestly, it's too much for us to continue to see your clientele if we're going to be forced through all these hoops to get a fraction of the payment, Yeah. And it also, go ahead.
No, please go for it.
Well, I was going to kind of change directions a little bit.
Oh, I was just going to add one thing then. With your flat rate payers, it's also important to know what is considered a day rate, okay, or a flat rate, because I have many practices that are dual discipline. They have PT, OT, and speech. Well, some flat rate payers, if you do PT and OT on the same day, you're getting one rate.
Right.
Okay. So if we don't know that proactively, we don't know we have a scheduling problem. That patient needs to come 4 times a week or whatever that plan of care is asking, so that you're not doing dual disciplines on the same day. Doing that will increase your revenue.
Well, you mean, yeah, exactly.
Yeah. So again, looking at your fee schedules, looking at your EOBs, looking at what's not getting paid.
Well, I love that we're talking about this because number one, it's something that I don't think I've clearly discussed with anybody in the past 5 years on the podcast. And it's something that I'm sure many owners would look at and be like, one more thing. Right. But it is kind of what we signed up for when we put our shingle out. The way to approach it and the way you addressed it, I think, is important to remember. And that is 1 or 2 contracts at a time. Right. Yeah. Let's not try to handle it all this month. Let's just look one at a time. And also, like you said, start with your biggest payers or some of your the bigger payer mix, the bigger percentage of patients, because those will probably be more readily available when you're talking about your Medicares and maybe your Medicaids. And if it's a state-run plan, then it might be easier to find in your VAs and Tri-Wests and that kind of stuff. So start with some of those, get comfortable with the processes. Then as you get to some of the smaller payers, in terms of percentage of population, percentage of patients, then you're a little bit more comfortable. Okay, this is what I need to do next. This is what I need to do next. And then once you've done it a few times, you can just rehearse that and reiterate that every quarter, right?
Yes.
Gotcha. Cool. Before we get back into it, I was about at the end. Are you feeling pretty comfortable about what you shared? Did we cover a lot of the stuff? So,
I think we gave more than we did a mouche bouche. We gave a good bite before before they jump in and do it as the main course. But really, I've been helping people do this, Nathan, and it's just been eye-opening. Yeah.
Right. So if people wanted to reach out to you, get your support, get your advice, how do they do that?
Well, they can reach out to me directly. Do you want me to?
Whatever you feel comfortable sharing.
Okay. They can reach out directly on my website, guidepostconsultants.com, or Connie at guidepostconsultants.com. That's the fastest way to get to me.
Connie, are you on our Facebook group?
I am not.
Okay.
I am probably the only person on the planet that is not a part of Facebook.
Okay. Well, then I can't invite you if you're not on Facebook.
My Guidepost is on Facebook. So if you would like to invite Guidepost, that would happen. That could happen.
Go through Guidepost, and it would be great to have you on the Facebook group, because look for our group. It's Physical Therapy Owners Club. We're just, join, see if you can, we'll let you into our group, because people are going to have questions. And I see them posted every so often about contract negotiations, about, recently someone posted about how Medicare payments were being held up. I mean, and he's noticing that pattern every quarter, that payments aren't getting released for the first 1 or 2 weeks of each quarter. And he was wondering if other people were seeing the same thing. And in a situation like that, it would be good to have someone like you that has some of that insight. People are asking about contract negotiations, like I said, and billing and collections questions. So if you were on there and saw some of those questions, it would be great to have you respond there as well.
Sure, I will do that.
And thanks for letting us know. If people wanted to find you on Facebook, they can, right?
Through Guidepost, yes.
Okay, cool.
Yeah.
I'll have them look out for it.
And LinkedIn. I'm on LinkedIn.
Okay, good.
Yeah.
All right, cool. All right, well, thanks for joining us today, Connie. I really appreciate you reaching out, like I said, and thanks for joining me again on the podcast.
Well, thank you for having me.